My name's Liam Witherspoon from University of Auckland and one of the QuakeCoRE directors, and it's my pleasure to chair this first session for this year. And as we'll see, we've got John Lucas from the Insurance Council of New Zealand, who's going to present on seismic damage repair certainty to keep insurance affordable. And so John began his insurance career in 1981 in farm and commercial insurance. He's worked in the UK and Australia, specializing in entertainment insolvency insurance work. And he joined the Insurance Council here in '96, taking this role to help coordinate the insurance industry's response to emergency events. And this has included exploring solutions for many recovery challenges. So, for example, the earthquakes in Canterbury and Kaikoura. And this year, of course, we've had a few events. So John's been helping with the North Island flood and the landslip events, which I guess is now extended in its extent. So John's working with the stakeholders to develop scope for a seismic repair certainty that should become part of the low damage seismic design. So repair certainty will help keep earthquake insurance both available and affordable in New Zealand. Insurers also support the need for specific seismic repair guidance for our present buildings. And John is also a senior associate of the Australian New Zealand Institute of Insurance and Finance. So great to have you here, John. I'll pass the floor over to you for your presentation.
Look, thanks for the great introduction, Liam. And look, thank you everyone for your interest in listening to what I have to say. What I'm going to be talking about is a little bit of an outline of stuff that started a couple of years ago, where I was talking with some of your colleagues and some of you on the call today, on the presentation today, would probably been involved with some of the work we've been doing. But look, I'm going to outline two things. First of all, what the insurance appetite for earthquake risk is in New Zealand at the moment. I'm going to talk a little bit about the market, and then the main part is two ideas that we have, which if you think is feasible, we're really keen to have members of QuakeCoRE engage with us and help us develop this further into something that will ultimately come up with a building design that is got repair certainty built into it. And I'll explain what that means. So look, thank you. Insurers face a degree of uncertainty when pricing a building for earthquake coverage, as they do not know if that building is going to end up being a constructive total loss following a moderate or moderately severe earthquake event. So the definition of a constructive total loss is where the repair cost for the damage exceeds the sum insured. This uncertainty will apply to any new building, even if it's of the new low damage seismic design theory that we're all thinking about at the moment. So insurers will need to reflect this uncertainty in their premium pricing. And this premium pricing is the problem at the moment in New Zealand because the insurance market has had the experience of fairly new buildings becoming constructive total losses. So the question you'd all be asking is, would we ever get lower insurance rates for earthquake with these new low damage seismic designs? And the message from the reinsurance market is that this may be unlikely unless we can build repair certainty into these new buildings. What they want to see is constructive total loss risk being better understood. So this presentation will outline how we could achieve this. There's another part that we want to talk about as well, and that's our current building. So right now, the big concern for insurers is being able to repair seismic damage to our current building stock. There needs to be some new thinking around the practical and economic repairs that are available. And we believe that the elements of the fairly new 2025 FEMA Part 2335 guidelines for post-earthquake repair and retrofit could help us. So I'll talk a little bit about that a little bit later on. So I'll outline some of the things we're going to discuss today. So I just outlined the uncertainty issue that insurance market faces with earthquake in New Zealand, and that's why the pricing is higher. We're also a small market, so we're high consequence for very little premium income for some of these reinsurers. So they do price us pretty high. Update on the current earthquake insurance market in New Zealand has fluctuated quite a bit. Recent ICNZ recent Insurance Council resilient activities, and I'll talk a little bit about being able to repair our current buildings with a bit more detail about the FEMA standard, and to include repair certainty into low damage seismic designs of the future. And then just a few thoughts on how we can work with QuakeCoRE members going forward in 2026. So just an update on the insurance market. So right now, pricing and capacity to hold insurance risk for seismic natural catastrophe insurance, as we call it, is very different to what it was in 22-23. So since 2024, pricing has changed a lot. There is a lot more capacity for our local insurance carriers to accept risk and price risk a little bit lower. And this change has been driven by international reinsurers, such as more direct Lloyd's facilities entering our New Zealand market to write business. So local insurers have been reducing their rates to compete. What you don't want is an insurer that stops underwriting new risk. They end up with lack of new premium on their books, and they've got to pay claims somewhere. Without premium income, they're in trouble. This is happening on a global basis. It's a global cycle. So we're seeing pricing and capacity alternate through cycles of catastrophe loss payback and periods of benign loss experience. So I maybe need to explain here where you've got, if you have a large, let's say a large earthquake event where insurers and their reinsurance partners pay out massive losses over the next 10 to 30 years, reinsurers expect to get much of what they paid out in those losses back in future premiums. It's not always possible, but that's what they do. They've got to replenish their capital base that was eroded through paying out those big claims. And that's given anywhere around the world. Without that payback, they're not going to be able to write future new business. So that payback is a pretty important issue, and I'll talk about that a little bit later on. Recent resilience activities outside of earthquake, we've been lobbying local councils around New Zealand to improve their flooding and landslip problems. Just in the last, I was up in Tairāwhiti a couple of weeks ago. It's a picture I took of typical problem we had around Aotearoa and the Hicks Bay area where hillsides came down basically through heavy rain. So yeah, we're building in risky places, and we want to see new developments going forward, controlled a bit more, build in safer locations. One of the activities I'll just note about is our recent submission to the Earthquake Prone Building Bill, which simply outlined that the proposed legislation change is not going to alter the insurer's view of risk, as the government looks to recalibrate the life safety settings with the new legislation. So we do hope that owners of older buildings around New Zealand do understand that. They're not going to see any change in their risk profiles or premiums for their buildings. Okay, repairing earthquake damage to our current buildings. Surprisingly, New Zealand does not have an agreed and cost-effective standard for concrete repairs. Often repairs are considered are made up on the fly, and many parties begin to argue. You've got an engineer working for looking after the interests for the building owner. You've got an engineer looking after the interests for the insurer, and they don't always meet in the middle. So it's fairly challenging to repair an earthquake damaged building. There's a big liability factor for engineers. and contractors, and thinking is, if you have enough insurance coverage, why not just write the building off? Unfortunately, this is unsustainable, as lots of total loss payouts equals very high payback. I talked about the payback issue earlier. So that means that the New Zealand market in future years would see very high future premiums. Some reinsurers may consider there's little opportunity for payback and may decide to exit our market for good. And that's a risk that we don't want to see happen. We did see that after Canterbury. Some reinsurers and some local insurers actually exited the market. It's a problem around the world. Large economies with known seismic risks, such as, in the US with California and, of course, Japan, do not fully insure for earthquake, as it's very costly. And they make do with more limited earthquake coverage compared to what we have in New Zealand. So, I think New Zealand's on a borrowed time for the sort of earthquake coverage we currently have. And we need to think about that in future designs and the ability to repair our current buildings. So another problem we have is more aligned to the New Zealand insurance market, and that's our generous wordings that our insurance policy contracts have. Typically, we see our contracts, the operative clause is to repair to substantially the same as new. And that's not always possible. The owner of a building could argue that the building should be a total loss because insurers can't repair to as new. For example, a crack in a concrete floor or damage to other structural concrete elements not always be repaired to as new. And this was very common after the Canterbury and QuakeCoRE earthquakes. So if you can't honour your policy wording, then the alternative is to just pay out a total loss. So we need really to think about how we can avoid this in the future. So if we've got a seismic repair standard for our current buildings that allows the insurer to repair to similar to new or in a condition that's agreed that would be sustainable using new materials, but not the same as brand new, or some such wording that would be aligned to a repair standard, I think that's where we need to get to. Because continuing to argue about how we repair and then end up giving up halfway through and writing the building off is not going to be sustainable. So this is where I think that the FEMA Part 2335 guidelines for post-earthquake repair and retrofit could really help us. So look, I want to shout out a big thanks to Professor Santiago Pujo of the University of Canterbury for bringing this to our attention. I know a number of New Zealand engineering experts contributed to the guidelines development. So we'd like to see this become a basis for a sort of a New Zealand standard or some agreement for concrete building repairs in the near future. And the next step there is logically where insurers would have their wordings aligned to allow repairs to not brand new standard, which is not always achievable, but to a standard that allows practical use going forward. It could see the value of the building change a bit, but at the end of the day, it's better than losing the building altogether and having to adding that to the big insurance costs going forward for the country. Okay. Low damage seismic design. This is something that you guys have been working with for some time, and it's great to see this really coming along now and will be included in future buildings, future designs that will be on drawing board shortly. But one thing we believe we need to consider is how do we fix these buildings? You may have already scoped that into the to the low damage seismic design, but we don't understand that yet. So we need more certainty about our future new buildings. Will they be repairable? So insurers have had negative experiences following the damage to many of the new buildings in Wellington from the QuakeCoRE earthquakes back in 2016. Many of these buildings were understood to be of a more resilient design with favourable NBS ratings, but many of those buildings became constructive total losses and they weren't repaired, they were demolished. So insurers internationally certainly have not forgotten this. The reinsurers we meet with are quietly sceptical about earthquake cover in Wellington. So this is something we need to fix. So the question would be asked, and I think it's something I mentioned earlier, would we ever get lower insurance rates with future low damage seismic design buildings? So the message is fairly clear from the reinsurers. Yes, it would be achieved, but only if certainty of repair is built into these new low damage seismic designs. So in Wellington, we currently have a number of new buildings that appear to be a fairly robust seismic design using extensive steel superstructure, viscous dampers and base isolation technologies, and even laminated timber frame buildings. And the picture there is a building just behind us here in Wellington, part of the new parliamentary structure. The jury's still out on mass lumber frame buildings. As far as insurance goes, they're lower weight, fairly ductile, I guess. How do they perform after being flooded with a fire sprinkler system after a fire? So there are things we're still learning about that. But as far as seismic resilience goes, they're probably very good. Hopefully we can repair them if anything goes wrong, but they probably won't get damaged. Anyway, so these new technologies have not really been tested as yet since at least 2016 with the Kāhui earthquake. So far, we've not had an earthquake event big enough to really test these new buildings. If they did suffer damage in the moderately large earthquake event, would insurers would not know what could be, what is likely to fail, what it would take to repair those failed elements in both cost and time. And also they need to understand the costly damage that can occur to non-structural elements as well, which often can be 70% of the building's insured value. So current building designs may require significant deconstruction of the building's components to be able to repair some of these major structural components that could be damaged, such as fractured shear walls or damaged steel support beams or columns or foundation supports. So that's a big question mark that insurers don't know, and the uncertainty means your pricing is a bit higher. So the repairable building design challenge from the Insurance Council to the QuakeCoRE members. Could engineers design a low damage seismic design building with the primary objective that it will be repairable? I think that's something we all need to really think about. So we simply understand that the idea of a low damage seismic design building is that it would be reasonably operational the day following a moderate earthquake event. The modular replaceable elements that could be used, can they be removed and replaced without significant deconstruction of the building? Could we also see replaceable structural elements being quickly fabricated in another part of the country and installed on site to speed up repair? So speed of repair is essential, as insurers also cover the loss of rental income from the building if it's not habitable during its repair. And this is also taken into account when undertaking repairs or deciding whether repairs should be looked at. So if the downtime for the building is going to be a very long period, the insurers may say, well, it might be easier just to write the building off. And again, we're going to end up with high payback consequences in the future. So the insurers need engineers to prove that any future, let's say, low damage seismic design building is built repairable. So there's a lot of detailed information that the insurers will need about the building's repairability. So So there'll be a need for engineering technical information to prove that the building has been designed as repairable. There's some information, of course, no doubt will be very technical, but insurers will require it, and they will have people that will understand it as it's their business. In addition, there will be benefits from insurers receiving on an annual basis when the insurance renewal is renegotiated, expected annual loss values for the building as a whole, as translated into what individual components would be likely damaged and what it would cost to repair in any one period of insurance, any 12 months. So these cost estimates will be updated by the professional valuers doing insurance valuation work from their QS teams. At the same time, the insurance placement valuation is undertaken annually, so those would work together. So we want to know what, if an earthquake event happened in any period in the next 12 months, what is the likely cost of repair? As things like inflation do have an effect as well. So the insurer's internal modelling would calculate the loss risk and premium with greater certainty. And we know this would remove the uncertainty, which would see reduced costs. And I'll explain how that would work in a minute. This information will help insurers make more informed decisions that would lead to lower risk pricing by removing much of the constructive total loss uncertainty risk. Okay, I'm going to talk a little bit about today's reinsurance market. Reinsurance market drives the pricing for earthquake cover in New Zealand as insurers transfer most of their earthquake risk to the natural catastrophe reinsurance markets. In recent years, this pricing has fluctuated significantly for New Zealand, and certainly Wellington is the centrepiece for the pricing because of more recently, the natural hazards recalibration of Wellington has had a bit of effect on that. So right now, the reinsurance market has softened a lot, but Wellington's still got the highest pricing in the country for earthquake. Insurers purchase an annual reinsurance program that will cover all their risks that they insure for amount above their net retention limit. So that's what the insurers would absorb themselves. And most of that for earthquake is transferred to the reinsurer. Currently, reinsurers will want to know the number and value of risks that are located within the insurer's portfolio. For example, a portfolio of buildings in Wellington. The reinsurance program includes all buildings, some good, some not so good. And one price is applied for all these risks. So it's quite coarse. So with the repairable low damage building design concept, we're aiming to create a completely new class of building that reinsurers will rate completely separately from all other buildings. So we're starting with a clean page. Initially, these risks will be placed individually. There will only be a few to start with, of course, and specific reinsurers who we know are interested in making a difference will take on board some of those risks. As the stock of repairable, low damage design buildings increases, reinsurance costs for that new class of building will decrease, and these cost reductions will benefit those building owners over time. Future availability of earthquake insurance in New Zealand. These new repairable low damage buildings could be a good investment if the earthquake insurance market was to become less available in New Zealand. And look, that's always a possibility. Who knows what the future brings, but we could be only one significant earthquake event away from not being able to purchase earthquake insurance like we can currently. Maybe whatever the price is, it's not available. So we feel that earthquake engineers should be interested in this. It may lower insurance premiums significantly to promote new growth and construction activity in New Zealand, particularly in high-risk areas such as Wellington. We also think it could be a world first that could benefit markets like California and even Japan, where current earthquake insurance is too expensive for many building owners. Where you've got a building, you've normally got a bank loan, and in most cases banks do require having their security insured against most damaged causes such as earthquake. So in New Zealand at the moment, many banks are not keen to insure risks that don't have insurance. I know that California, for example, overseas, it's not as much of a problem because they understand that earthquake is not always insured, but they do look for, banks are more likely to lend on resilient developments rather than older buildings. Okay, I guess what I'm saying here is New Zealand could pioneer repairable, low-damage design buildings. Could be a similar deal to what we did back in the 80s with the base isolator technology that was developed by some engineers in New Zealand. So I think the next part is reasonably important to think about, the next steps. So I'll just go back on where we came from, and it wasn't so long ago. Back in late 2024, we made an approach to the University of Canterbury with repair certainty and design. And then following that initial work, I did a presentation at the Society of Earthquake Engineering conference last year, and I met Professor Santiago Puto, who worked with us to define the concept a little bit further. And the big thing was he raised this whole issue of what do we do with our current building stock? We talked about that earlier. Dr. Michael Drayton, who's part of our working group, and I've been working with Michael on this for the last sort of 18 months, made a presentation on my behalf last year at the QuakeCoRE conference in Dunedin to bring you up to date with some of this thinking. So I guess we're at the point now where if you think that there's some merit in this, we need to probably move forward and make a few decisions. So I think the next steps would be, first of all, to develop a seismic damage repair standard suitable for our current buildings using elements of the FEMA Part 2335 guidelines. I think we need to move reasonably quickly on this. There may be some arguments that our current construction standards, 1170.5, are adequate, but, engineers use that day to day, and we've had those arguments in the past. So I think we need to be flexible and just consider a dedicated repair standard that allows the insurers to move away from that strict wording of repair to as new, which we can't do. The next part would be for insurers then to develop, alongside the repair standard, a product that matches the repair standard, to do away with the repairs to substantially the same as new, which, as I said, creates disputes and triggers constructive total loss discussions. So we can do that fairly quickly as a market, but we need the standard to be there for the first, to work with. That'll be the trigger point for us. And then the third step would be to start work on developing repairability into the scope of low damage seismic design. Look, I understand this is not going to be easy. It will require a lot of analysing of structural and non-structural component selection, what will likely fail under seismic loads, what it's going to cost to replace. And that's the big thing. It's what it's going to cost to fix and replace. That's the part we're asking for. The components and construction and design methods, understanding what could fail, what can be made easily and cheaply replaced without the need to deconstruct the building structure, And this is the bigger conversation that I think needs to be had with experts within the QuakeCoRE community. So I'm hoping this presentation could act as a bit of a catalyst to start more work with QuakeCoRE. And we certainly look forward to working with you on developing, firstly, a repair standard for our current buildings that works with insurance, that's practical, keeps costs down. And secondly, our future designs, no doubt will be low damage seismic design, but we want them to be repairable, and we need to prove to insurers, especially the big reinsurance markets overseas, that they are going to be repairable if we're going to succeed in getting insurance slightly cheaper, but probably more important, have continued viability of earthquake insurance in New Zealand. So look, that concludes it. Thanks for listening, and happy to answer any questions you may have. Thank you.
Excellent. Great. Thanks very much for that, John, for the really interesting presentation and your perspectives and the challenge that you've laid to the community and some of those options for next steps.